Hey, and good morning. I'm very fortunate this morning to be joined with a good friend of mine, Jeanette Hartman from American Pacific Mortgage. And Jeanette has been in this real estate business. Jeanette, really and truly, seems like forever. Is that right?
It does, Roy. It's been 31 years.
All right.
I started when
And
I was 9. Just if you're going to do math, we'll start there.
31 years, and that is a long time. So I've got, let's say, I'm Roy McCann. I've got 20 years in the business. So between us, we've got 51 years of selling homes. And I would say that, is there anything you haven't seen?
I'm sure there is, because every time I think that I've seen it all, something else pops up and you're like, okay, something new. But the difference is that when you've had a lot of experience, you know how to overcome and object and move forward when you do see something new.
All right, fantastic. Well, today we are going to talk about what to do in buying a home, because it's one of those things that, believe it or not, there's a lot of misunderstandings. Would you agree, Jeanette?
Absolutely.
Yeah, so we're going to take our time today to iron out a few things. But first and foremost, it's a great time of the year. And I just wanted to share something that I saw on Facebook that Jeanette and her people were doing the other day. And this is something that I think you do every year, Jeanette. Do you want to tell us a little bit about this work that you just did and posted on Facebook? And congratulations to your office, by the way.
Thank you. So my office has done something for the last 15 years called Cookies with Santa. And it started because my best friend since 7th grade comes out and she bakes cookies with me all weekend long. And then I needed something to do with these cookies. So I brought them into the office and I started doing open houses at the office. And we have Santa that comes and visits. So we've turned it into Cookies with Santa, and people can stop by. It's an open house. They can have a couple homemade cookies. And then if they have kids or grandkids, they can visit with Santa. Several years ago, we added another element where people could bring an unwrapped toy and we would donate those to children in need in the community. And this year, because of COVID, we weren't able to do Cookies with Santa. So I got to thinking about it and I thought, all these kids now, we're not going to have a reason to donate the toys. And so I put a challenge out there to my clients. And I said, if you take a picture or make a gingerbread house, it started out with making gingerbread houses, and you post it to Facebook, we will donate a toy for every picture that we get posted to our Facebook page. And so on Sunday, my team all went out and we adopted 4 families through the Salvation Army, 16 children, and I think there was over 20 people total, including the parents. And we shopped for 4 families for 4 hours and spent over $2,000 getting them ready for their Christmas holiday. So it was a lot of fun. My team had a great time. We brought kids along from our families so that they could see that, some of these kids, what they're asking for Christmas is shampoo. They're asking for the basics, and sometimes we take for granted how lucky we are. So this was a really great way to give back to our community. I've had people send in checks and donate money so that we could help continue the shopping. And I've had people bringing in toys to our office. So if you want to stop by and drop off a present, we're still accepting them through Friday.
Fantastic. That is wonderful. And we will put the contact information on for Jeanette. But Jeanette, what's the best way for people to reach you? I have your number here on the screen, but that is your office number. Is that okay for people to call you at the office?
Absolutely.
Okay. I'm leaving the number up there for a few seconds, but I will put it up again later. So that's a wonderful thing that you're doing. And, in spite of all the challenges we've had, the pandemic, it's still a great time of the year, and it's wonderful that you're helping other people. So thank you very much to all of your wonderful staff that I've had the pleasure of dealing with. I really appreciate them. Thank you.
You're very welcome.
Okay, so let's talk about right now. Again, I want to buy a house, and Jeanette, let's talk. What's the first steps anyone should be taking in preparing to purchase a home? Let's say you're a first-time buyer. What's the first steps that you want to take?
So the first step is they're going to want to get pre-approved. And it's almost required nowadays. I think as an agent, you probably need an approval letter even to make an appointment to show properties in this crazy environment that we're in. So the first step is getting on the phone with me, having an initial consultation. There's no charge for it, no obligation. I spend 30 minutes to an hour with everybody, going through with them all of the different steps and what they would need to do to purchase a home. So in a perfect world, I need to see their documentation. I mean, I need to see their income, their assets, their credit. I have people that tell me, like, well, my Credit Karma score shows this. Do you have to pull my credit? Yes, we have to pull your credit. If you want a true approval letter, my approval letters, they mean something. They're not just a piece of paper. You're not going to drop it on the floor and watch it bounce. So I stand behind them, and that's important to me. So
Yeah.
having that initial conversation.
Let me stop you there a second. Just clarify that. The difference between a pre-approval letter and a pre-qualification letter. What's the difference between those?
So a pre-qualification letter means I ask you the information, you tell me, and I believe it. So I'm going to ask you how much you make. You tell me $6,000 a month. Your FICO score is 800, and you have one car payment. That's the only thing that shows on your credit. And I believe you, and I write a letter based on our conversation only that you're pre-approved or you're pre-qualified. A pre-approval letter is a lot deeper than that. A pre-approval letter means I've verified everything you told me. I've seen your income documentation and it supports your income. And you'd be surprised, Roy, how many people really don't know what they make, or more important, what we can use. I'll give you a perfect example. I have a client who, cross your fingers, they're going to be closing on their home next week. Now, they were supposed to close on their home last week, and the borrower in the 11th hour, we found out he changed jobs, which is a big no-no. Don't change jobs while you're in the middle of getting a loan.
Or don't buy a car.
Or buy a car. But the problem for him, in his mind, he made $20 an hour more than his previous job, so there shouldn't be a problem. But he's a plumber, and plumbers get paid based off of, they guarantee him a base pay or prevailing wage per job. Well, the job that they hired him for is a substantially higher rate than the guarantee that they're going to give him, but I have no proof of the amount that he's going to be making, so all I can use is the guarantee. So when I look at your income documents, I have to be able to support to the underwriter what your current income is and that it's likely to continue. If someone's self-employed, they don't know their income. They may know this is how much I made, but this is how much you wrote off. Like, I'll hear from people, oh, my CPA is really good. Well, a really good CPA and getting a home loan don't always go together really well. So we have to look at the tax returns. We have to see if they're self-employed, what did they write off? There certain things we can add back in, but I have to see the tax returns to be able to do that. So a pre-approval means I've reviewed all your documentation. All your income's been verified. We've looked at your bank statements. One of the things we're looking for is, did you have any large deposits? So if I have $30,000 available to buy a house, and then I look at your bank statement and I see $20,000 was deposited last week, I can't use that unless you can document where it's from. If it's cash that you had in your mattress in your house, first of all, don't tell me because you've told me where you lived. But if it's cash, I can't use that. There's ways that we can get around it, but once you deposit it into your bank account, it's a lot more difficult. So have the conversation before you do anything, before you take your mattress money and deposit it, before you change jobs, before you make any changes. Have the phone call so that we can guide you through each step of the way.
Yeah, I had some buyers that came to me with a pre-qualification letter, and you know, they put an offer in on a two-story house. There was one story before the offer, and there was another story after the offer. So get pre-approved, and it's because the documentation, there is a lot of documentation that people have to get to you. And I mean, do you want to do a quick overview of what that documentation is that the people
Absolutely.
need to get you, so you can take a good look at everything? I know you've got to get pay stubs, bank statements. Go ahead. What else?
So we need to verify 30 days of pay stubs. So if somebody's paid once a week, I'm going to need 5, because you're paid once a week. There's 4.33 weeks in a year or a month. So we need to verify 5, a full 30 days of a pay stub on pay stubs. If you're paid twice a month, then I need to know, are you paid the 1st and the 15th, or are you paid every other week? Because if you're paid every other week, I need 3 pay stubs. If you're a teacher, I need to know if you're paid on a 10-month year, 11-month year, 12-month year, because every teacher can be a little bit different. So we need to verify the pay stubs. We'll also need to verify W-2s for a minimum of 1 year and sometimes 2. And if somebody is, depending on the type of income that they receive, if you're paid hourly or salary, I'm going to use your base pay, your current pay. But if you're paid commission or bonus or overtime, I have to do a 2-year average of that portion of the income. So we might have to dig a little deeper. And sometimes people, technology is wonderful. So if people are paid through a company where they can go online and get their paychecks, then I can ask them to go online and get me the last paycheck that they received for 2019. If I need the one that has the most income, if their paycheck's broken down and it tells me this is how much is for overtime, this is how much is for commission, for bonus, I need to know that so that I can average it out correctly. But we're always going to pull out their base pay and then average the other types of income.
Okay.
We're going to need bank statements. So I always like to review one bank statement for sure. And ideally, they're going to need 2 months, but usually during the process, they can collect the second one. What we're looking for is deposits. We're looking for large deposits, anything that's not associated with how it got there. So if it was a paycheck that's auto-deposited, great, we don't need anything. If it just says transfer from another account, I need to see the other account, even if it's theirs. So we're going to need income, assets, and then I need to review credit. When we pull credit, my credit report will tell us if there's a potential to get someone's credit score up. So, and then there's an additional report that we can run that would say what they need to do to get their credit score up. And sometimes it's as simple as paying this account down $10. Other times it's, paying multiple accounts down by $5,000, maybe it might take, but it'll tell us what has to happen to optimize someone's credit score. Sometimes it's necessary, we have to do it for certain programs. Other times it just might improve their pricing. So when I pull my credit report, I can look at all that for you. If you want me to, I will have people that are like, well, here's my password to Credit Karma. Well, Credit Karma is a great indication. It's great for people to kind of monitor on their own and see what's happening. If they see their credit scores are trending up, that's a good thing. But your Credit Karma FICO score is very different from a mortgage FICO score.
Yeah, Jeanette, a good friend of mine, Seamus McCaffrey, out in Phoenix, Arizona, owner of McCaffrey's, Rosie McCaffrey's Aries Pub. Brilliant food, great entertainment, up the celts. He has a question. We're going to wrap it up after this question because we need to do this again next week. We're going to be doing this every week from now until we analyze everything here there is to get along. But Seamus has a question. What happens during this COVID pandemic if people have collections on their credit? And that is people who have had excellent credit previously or a job previously. What are you doing with those people today?
So collections will definitely impact someone's FICO score. And sometimes if it's a medical collection, they're usually not going to be required to be paid. Depending on the loan program, it also may not be required to be paid, but it will affect someone's FICO score. And so oftentimes what we see people do is they go in and they dispute it. And when someone disputes an account, it will mask or put a big Band-Aid over that account, and it won't read it accurately. So depending on the amount of the collection and where it's from, sometimes we don't have to deal with it at all. Sometimes we have to have them remove the dispute so that we can see it. But many times it will have to be paid. It just depends on how much the collection is, what type of collection it is. Medical, like I said, we typically don't have to deal with at all.
Okay, and also just finish up, student loans, how are they affecting a person's credit score?
So student loans, the same thing, although most of the student loans have been put into forbearance during COVID. And so oftentimes when we see someone's credit, it won't show a payment for a student loan. Again, depending on the type of loan, we may have to factor in a payment. So for example, an FHA loan and a Fannie Mae conventional loan, we have to qualify the client with 1% of the loan balance if a payment doesn't show on the credit report. FHA is always 1% even if there is a payment. And Freddie Mac, which is our other conventional guideline, is 0.5%. So those are some of the things that we analyze when looking at someone and pre-approving them is, I mean, just to know that someone's going to go with a conventional loan isn't enough. We have to know, are they going Fannie Mae, Freddie Mac? You know, there's different guidelines, not big differences, but some just little intricacies between the two.
Okay, Jeanette, I'm going to wrap it up here, but I left your number on the screen here. And Seamus, if you have a question for Jeanette, take her number down, give her a call. Also, we're going to be doing this every week from now on. Every Wednesday, we're going to be going in depth into buying a home. And Jeanette's going to be talking more about the qualifications and then the difference in the different loans, conventional FHA. And I put this book together, Jeanette, myself, how to complete guide to buying a home. Doesn't go into too much into the getting qualified pre-approved, but it does deal with the things that we will get to later on, making an offer, negotiating the offer, inspection, repairs, etc. So I'll be happy to send anyone a copy of this book if you also.
Oh, we lost you, Roy. We lost Roy. Oh, hopefully he's going to jump back on here.
Yeah, they say I look better on the book cover than I do in real life. So anyway, great information to start with. Let's do this here. Next week we will be back at the same time, 9:30. And Jeanette, again, going to leave her number on here. Please call her with any of your questions in relation to getting qualified, pre-approved, self-employment, what you need. And we'll talk more about getting an FHA loan and other things to do, and getting yourself perfectly positioned to purchase. Because one of the things, Jeanette, got to tell you, one more thing, tell everybody why it's a great time to buy right now.
Oh my gosh, interest rates are incredibly low. So, you know, that's another great conversation that we can talk about, Roy, is I have a really simple presentation about that will show how it's cheaper to buy a home today, even though the prices are higher than they were a year ago. So that'd be a great little conversation maybe for our next talk that we do.
Yeah, and I like to tell everybody, if you're on the fence, people are expecting they say to me, I'm going to wait the next year, Roy, I want to see what way the market's going to go. But we're very optimistic that the market's going to stay strong. We'll talk next week about the FHA just increasing the loan limits, which makes housing more affordable, which should stabilize the market for another for a good time going. So thanks very much for joining me today, Jeanette. I really appreciate it, and I will see you. Well, I'll be talking to you later on today because I got a client for you coming to call you today, and we'll talk next week.
Great. Thanks, Roy.
All right. Best of luck to you. Bye.
Bye-bye.